big news today from one of our very own. He's making a move on a stock that he's been a big believer in for a big part of this decade. Josh Brown selling Twitter.
I'm out.
At the open today.
I'm out. Feels good.
First time out since the IPO in 2013.
Yeah.
Tell us the reason.
So first of all, Happy New Year.
Happy New Year to you.
Thank you for ending your, no, I'm talking to the viewers. Thank you for ending your year. By the way, this is completely filled with Grey Goose. So just take everything I have to say with a grain of salt. Here's what I want to tell you. I had been very wrong on Twitter. I got out of it today with a very small profit. I had been adding in the 20s. I owned some as high as 40 around the IPO. Has not worked out. Actually, if you compare it to the tech sector, if you compare it to the S&P, if you compare it to any of the social media companies, it's been a big loser. And, you know, this is something that I was thinking about doing later on in 2020. I was going to gradually sell down my position. Two of the things that made me feel that it was time to move on. Number one, the CEO, who's a half CEO, moving to Africa next year. I really don't understand what's going on with the governance of this company. NYU professor and my friend Scott Galloway has it exactly right. Somebody's got to step in here, possibly an activist. Has not happened yet.
Remember, this is what we talked to. I specifically asked Costello and Bain when I had my conversation with them out in San Francisco.
Listen,
and it was the day, I think it was, soon after the Dorsey announcement. It was maybe the day after the Galloway op-ed. Like, what in the world is going on here?
Everyone knows. So this is the white elephant. Everyone knows. First of all, Jack is a beloved figure in Silicon Valley, just not on Wall Street. Very, very different take on how he's built the company, run the company. I still think the company is going to do well. I just don't think it's a great stock to be in right now. There are way too many opportunities. The second thing that really bothered me was this idea that they are going to ban all political spending. This is like the only reason to own the stock. This is what Twitter does best. It influences politics. You might not like the direction in which it does so, but it's undeniable how influential the platform is.
The engagement and the interaction that people have when it comes
messaging.
to
this is electing
politics.
This is electing presidents around the world, including here. So they've decided they're not going to make any money from that. So you say, like, what's going on with the platform? I wake up this morning. The number one trending topic in the United States is death to America. The number 7 trending topic is it's okay to be white. So they're going to monetize outrage like Facebook, but not make any money doing it. I just don't understand what the goal of this company is anymore. They're not going to make money on political ads. The CEO is going to move to Africa. It's just, there's too much money. And by the way, don't send me sympathy cards. Had a great year. I'm in Apple. I'm in Disney. I have stocks that are up 200%, 300%. It's okay. This one didn't work. I'm going to do some other things.
When you say you're going to do some other things, do you look at other social media-esque plays?
There aren't any.
There's Facebook and everything else.
There's Facebook, right? And there's Facebook and everything else. I mean, there's Snap. That's like going from Twitter to Snap is frying pan to the fire. I just feel very strongly that at a certain point, Twitter will be a better investment, and that might be when an activist gets involved. And it's not to displace everyone at the company, because I think there are great people there, but they're not serious. I mean, it's a $25 billion market cap. They're not serious.
This, to me, just says a lot in a bigger picture story. Here's a guy who, in your own right, is fairly prolific on Twitter. You have more than 1 million followers.
Well, I'm not closing my Twitter account.
But whatever. But I'm just saying, someone who's as prolific as you are, who likes the service as much as you do, as a user with more than 1 million followers, is throwing your hands up and saying, as a business,
well, first of all,
I don't know what in the world's going on. As a stock, it's not something I want to own anymore.
First of all, it's 1.1 million followers. Like
I said more than.
I don't want to correct you, but you got to separate a service you love from an investable company. I've been very fortunate. I've found a lot of companies that I love the service and have made me money. I'm in Dunkin' Donuts. I'm in Shack. I've done really well with these stocks. Like, I'm in Google. I use Google probably 5 times an hour. You've got to look at this company objectively and say, okay, they're not in trouble. They're okay. They're profitable. They're doing billions in revenue, but they're not serious about getting to the level that Facebook has gotten to and that LinkedIn under Microsoft has gotten to. They're just not there, and they may get there, and I might get back in. But right now, I don't understand what the strategy is for next year.
Okay. I wanted to lead with that story. I thought it was important. It's always interesting when one of our own does something meaningful like that, especially when it's a stock that Josh has owned for, the better part of the decade that we're exiting after today. More broadly, though, is it time to take a look at some of these stocks in your portfolios that you may like as a company, you may like as a service, but it just doesn't work as a stock? I don't know if each of you individually have names like that you just, maybe it's a broader lesson for investors who are watching today, a move like Josh has made in Twitter.
Well, I think, first of all, I think it's a strong move. I respect what he did. I would say that Twitter has struggled since the IPO. It's below the market cap in which it actually IPO'd at. So it's never been able to recognize its value. Its operating margin is just dwarfed by Facebook. Facebook has a 30% operating margin. Twitter has a 5% operating margin. So I respect what Josh is doing. I've never really saw the value in Twitter itself. I think the time to do what you're suggesting is on the other side of the new year. It comes in the form of earnings. And if you are able to see companies that you own in your portfolio report strong earnings, but yet there seems to be a perceived exhaustion in the performance of price, I think that's time where you begin to pare back allocations to some of your holdings. That would be the strategy I would have.
The other picture is it a Facebook world and everybody's just living in it when it comes to social media? If you want to own a social media stock, is that the only one, Jim, that you should own?
Well, that and I think Google, and I think Josh just made a case that LinkedIn is owned by Microsoft, but obviously that's not the biggest
I'm talking
growth driver.
Pure plays.
So for the pure play, yes, you're not going to own Snap if you have a choice between Snap and Facebook. But if I may, having answered that question, I want to go back to your question that you put to Joe, because what you've got here in what Josh is doing today, what I did with Roku yesterday, are individual stock stories. I sold Roku. I had a specific reason. It's momentum trade that's lost momentum. Josh has very specific reasons for Twitter. There are fundamental, very specific issues. Jack Dorsey moving to Africa just being one. And what I'm driving at with this is, as we look into 2020 and we say, whither goes the markets, we have to remember that it's going to be a collection of individual stock stories. So, Joe, to your point that we're going to see the earnings come in, I think people are going to make individual stock decisions there. So, for instance, there may be sectors that benefit. We may be looking at the financials and energy and saying, okay, we see earnings growth there. We may be looking at some of the more software-oriented stocks which have fluttered a little bit at their elevated levels and say, well, maybe the earnings growth isn't justifying the overall stock price. My point is this, and I know it's a hackneyed phrase, Scott, but it's really relevant here. It's not a stock market. It's a market of stocks. Think about these individual decisions that are being made. They're individual decisions, but collectively what you're seeing is, on the margins, selling.